this video, I'm going to show you how to customize your chart of accounts in QuickBooks. So here I am in QuickBooks. I've just logged in. I'm on my Get Things Done page. I'm going to go over here to the menu on the left, and I'm going to click Bookkeeping. And here's my chart of accounts. Typically, it sends you over to Transactions, but I've clicked down here to Chart of Accounts. So what is a chart of accounts? A chart of accounts is the list of categories where you can put things in your accounting system. So this is very intuitive when you think about your different categories, like your different income categories or your different expense categories, things like sales of product income or services, or whatever income account you have named. Could be floral revenue, could be a specific maybe like B2B revenue, something like that. And then of course on the expense side, office supplies, insurance, cost of goods sold, labor, all of that stuff, right? Pretty easy to imagine. But what you've also got in here is all of your assets, liabilities, and equity. So we're going to walk through all of that in this video. And so right off, you can see the account type here. We've got bank, accounts receivable. So we're starting off with our assets. Those are listed first. So I've got my Navy Federal checking account that's got a balance in it. Accounts receivable, money I'm owed. Customers owe me this money. Inventory, this is an asset that I hopefully will sell. Prepaid expenses, that might be something that I've maybe paid for the next 12 months. It's an asset. I've paid for something, and I'm actually owed service or owed products over some future time period. And then more assets that people, when you say assets, people usually think of like a building or land or maybe a vehicle, equipment. Those are called fixed assets. So those are all here, right? So if you purchase a fixed asset, you could put it into this category when that money comes out of your account. You can just simply search for it in that drop-down menu under category and categorize it there. And then down here, you've got your accounts payable. So we're getting into your liability accounts. So these are things that you owe others. So accounts payable, right? This, bills that you owe. Customer prepayment. So if someone has paid you for a job or a product or service that you haven't actually provided them yet, then that dollar amount of what you owe them in products or services is recorded here. And you can see I've got a gift card / certificate outstanding account. And it looks like I've accidentally created two of these. So let's see if we can go ahead and delete one. I'm not sure which one has activity. So let's find out. Let's see what happens when we go to edit. It looks like I can change any of these once it loads. I don't want to change it. I want to make one of these inactive so I'm not confused in using multiple accounts. So you're about to make one account inactive. This will remove it from the account category fields on your chart. Right. So it won't appear in any drop-down menus. Yes, let's make it inactive so that I just have my one gift card / certificates outstanding account, and that's it. Lines of credit, if you take money out for a line of credit and then you have like $3,000 to pay back, it could appear there. Taxes payable, if you have collected sales tax but you haven't remitted it yet, then it's going to appear here. Looks like I just drilled down into this account and I can see specifically this is where the sales tax that I'm collecting is coming from these invoices. And then once I do remit that sales tax or whatever kind of tax that is onto the government entity that is collecting it, then that's going to zero out. So it's really a pass-through account. it should go back to zero. All right, where were we? So getting down to things that people traditionally think of as liabilities, loans, right? So if I have an SBA loan, I owe $200,000. That full $200,000 might appear there, and then I'm going to slowly reduce that liability with my loan payments. Specifically, the principal portion of my loan payment. The interest portion is actually going to go into an expense account, which we'll see later on. And then here we go. So we're getting to equity. We've got opening balance equity. So that might appear if you have connected a bank account to QuickBooks, and at the beginning of the time period that you have told QuickBooks to go back to, so maybe you said, don't look at all the transactions from 2022, the previous years. Just look at January 1st of this year. So if there was 10,000 in the account, QuickBooks has to, match that 10,000 somehow. So it's going to just put that into this equity account to say, like, somehow, some way, somebody put $10,000 in, and that was the opening balance of a certain account. So that's why you would see something there. Below, we have two pretty commonly used accounts in equity. So we've got owner draws and owner investments. So owner investments, those are any deposits that the owner is putting into the business. This is very typical for when you're starting up a business. You're going to invest some of your own money to cover expenses at the beginning. And then owner draws. So owners can pay themselves this way. You can either put yourself on payroll, or you can take owner draws depending on what tax type your business is, LLC versus C Corp or S Corp. Typically, if you're just a pass-through LLC or like a sole proprietorship, you may take owner draws, and you can record how much you've taken in owner draws using this account. And you can record how much you've invested in the business using the owner investments account. And then, they've got a kind of a handy account for personal expenses. If you've maybe used the business credit card to go out and buy Chipotle for yourself, you can record that there. You've got some personal taxes here. If you provide yourself with benefits, retained earnings is going to be, the total amount of profit that a business has generated over its lifetime. So if you made, a profit of $10,000 2 years ago, profit of $10,000 last year, your retained earnings might be at $20,000. And we've got income. So finally, we're getting to those like very commonly used accounts. So income, cost of goods sold, and expenses, which is a little misleading because cost of goods sold are expenses, but they're different types of expenses. So cost of goods sold are expenses that are directly related to your income. So these are things that are used up when you provide a product or service to a customer. So if I am selling flowers, you can imagine that maybe I would book some the cost of buying those flowers that I'm turning around and selling. That cost would go into cost of goods sold because it's used up. I couldn't have sold the flowers without buying them first. So it's directly related there to the income. Whereas, if I am buying and selling flowers, my advertising and marketing, may not change in relationship to my income, and my, my rent, my utilities, my licenses, all of that is not directly related to my income. So that's this differentiation helps you with managing your expenses. I mean, if you're thinking about planning for next year, you can really understand which of your expenses are going to grow right along with revenue and which expenses might stay the same or just behave differently than growing along with revenue. So that's the idea behind differentiating cost of goods sold and expenses. All right, so if I wanted to add a new account, maybe there's like an expense account that I would like to add to track something in particular. I can go up here all the way to the top and press new, and it's gonna load in a second. So the first question, top left, is what kind of account do I want to add? And I've got all of these options here, all the ones we just went through, right? I got some assets, some asset accounts, right? Maybe if I'm purchasing a specific fixed asset, I want to create a specific fixed asset account. Like if I'm purchasing a truck or a dumpster or a building, maybe I would create a fixed asset account just for that. But let's say I want to record maybe an other income account. Let's try that. So other income is income that is not earned from the usual operations of the business. So if I'm a florist, I'm selling flowers, that's how I am typically earning income. I didn't get into business to like earn interest from my bank accounts, but maybe I do have some high interest bank accounts and I get some regular interest. So it's nice to be able to record those interest payments from my bank into this specific account. So interest earned, that's fine. I don't necessarily need a description. It's pretty self-explanatory. So I'm going to save and close. And now I've set myself up to be able to record those interest payments from my bank accounts into that specific account. So I'm not overinflating my floral revenue. I can divide that out. Okay, great. So that was just an overview of the chart of accounts. We covered how to inactivate an account, which means remove it from your drop-down menus and make sure that no one uses it in the future. And we covered how to create a new account. For more bookkeeping guidance, go to jumpstartinc.org/bookkeeping. And if you want to get in touch with our team directly for one-on-one advising, fill the form out on that webpage. Thanks again for watching.